Profits chargeable to tax, section 41, subsection 1. Now, what can happen is that in some cases, you might claim a deduction for an expense, okay? And subsequently, let's say you claim an expense in year 1, and you subsequently in year 2, you get some money in respect of such expense. So let's say, for example, A purchased some spare parts, okay, from B. Let's say the quantum was 50,000, right? And debited this amount to the profit and loss account. Subsequently, it turned out that the spare parts were of bad quality, and A told B, refund me back my money, right? Finally, the settlement happened in year 2 when B said, okay, these were somehow defective, okay, but you used them, so let me, instead of 50,000, I'll charge you only 40,000, right? And I will give you a waiver of 10,000, right? So in this case, instead of 50,000, now the liability of A to pay to B is only 40, or the expenditure is only 40, right? In such cases, if A has actually debited 50,000 to the profit and loss account, this excess or this reversal of 10,000 which he gets in year 2 is going to be treated as income, right? Income of A. Why? Because you've claimed an excess deduction in first year, so as and when this amount is received back, then you get a taxation event on this. Let's read how this fares. Okay, one other thing is that these amounts are chargeable even if the business ceases to exist. So let's say in this case only, what we were looking at, in year 1 A was carrying on business, in year 2 A is not carrying any business. Even then, if he receives this 10,000 or the waiver is received, then this 10,000 will be chargeable as PGBP income. Recovery of loss or expenditure earlier claimed as a deduction. So there is a recovery of loss of 10,000 which was claimed as a deduction earlier, where any loss or expenditure has been allowed as a deduction. So the condition is applicable if the entire 50,000 was allowed as a deduction, and subsequently any amount is received in respect of such loss or deduction, then the amount so received shall be deemed to be the income of the previous year when it is received. So this income will be treated as income of, or this 10,000 will be treated as income of year 2, right? Now let's take another case based on these facts only. So let's say, for example, A has again put down 50,000 as a liability. Okay, it's reflecting it as a liability in the books of accounts. And because B agreed not to take 10,000, so there is a cessation or remission of liability, which means the liability has come to an end to the extent of this 10,000, right? So deduction of a trading liability, and subsequently there is a remission or cessation of the trading liability. So there was a trading liability of 50,000 which was subsequently remitted, where a deduction has been allowed in respect of a trading liability, and subsequently there is a remission or cessation of such trading liability, then the amount so remitted cessed shall be deemed to be the income of the previous year of remission or cessation, right? So the liability has come to an end. So what's the difference between case 1 and case 2? In case 1, we are saying the entire 50,000 has been paid, and subsequently 10,000 is received by A. Whereas in case 2, the liability remains and there is a cessation of liability. It's one and the same thing. Both are chargeable to income tax under section 41(1). Right? Let's move on to the next slide now.